This video is brought to you by Blue Guardian, the only prop firm that protects their traders.
We don't have to wait for this level if we find a setup like this. If we don't find a setup, then obviously we wouldn't be trading it and we would still wait for this level. And if it just never comes about, say it just keeps trickling and just never pulls back, well then we move on. We can't have FOMO either. But if nothing like this happens and then we just, pull back, I'm buying. Or if something like this happens and we lose, great, attack the market the same way because you have your higher time frame level you can buy from. What is going on, fellow traders? I hope you guys are doing really well this weekend. Welcome back to another pre-market analysis video with Aerial FX. Looking forward to the next week. We do have quite a bit of setups that are forming that I want to discuss with you all today. These are the pairs highlighted in red, as we can see to our right. But not too many as we typically have, just because the market has been overall in a higher time frame consolidation phase. If you guys haven't noticed, we have just been chopping around, no significant movements happening that are of interest, especially to me. So during these times is typically what we see in August and December time. We have to just be patient and sit on our hands. At the end of the day, professional traders, what they do is they don't look to trade every single day or every single week. They only trade when their trading plan and their rules are met. And that's how we can be professionals in this industry.
Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
I'm going to go over everything that I see coming into the following week here. We're going to go over all of the prior setups that we talked about last week. The majority of them I'm going to be talking about today. Pretty much half of the pairs that are listed to the right are yen pairs. I do have a lot of great setups on XXXJPY. But on the other pairs, sometimes I just don't see anything and it's best not to go over them because it's just a waste of time. Obviously, for those of you who are in VIP, you guys will be getting updates and intraday perspectives through our VIP Discord channel. If you guys are interested in receiving these updates and all these trade ideas and setups, feel free to head over to my website, Aerial FX Trading, and just book a free call with me. I'd love to discuss your trading journey, where we can best come in and assist you in that. If we even can to begin with. If we can, great. We would love to have you on board. And if not, it's not a problem at all. We wish you the best of luck and we will be willing to give you our trading plan absolutely for free just for booking a call. All right, guys, so we are going to start off with AUDJPY. Obviously, on the higher time frame, we are in this higher time frame consolidation / pullback. Haven't really seen much wave play in the overall direction. We are in this overall pullback phase. So overall, higher time frame, we are extremely bullish. And the previous swing happens to be right here. This previous low to this high. Right? Because this is a high, this is a low. This is a high, this is a low. This is a high, this is the pullback, this is the low, this is the new high. So this is the current trading range that we're in. And we can see that even though we are bearish here, that does not mean we are just going to continue. Whoops, excuse me, guys. That does not mean we're going to continue all the way down. All right, that just means that we are in a higher time frame pullback phase or a lower time frame bearish downtrend. But we need to understand, where could price come into before reversing? Well, we can see here we had this huge sell to buy move in which I am interested in playing short term to the upside because this could be the end of the overall pullback and we may now start to see a deeper climb to the upside. However, we never came back down into this region of demand. And if you've been watching our prior pre-market analysis videos, you will understand why that is demand. Because simply high, low, high, low. This is the end of this pullback before we made the higher high. I really don't think structure is very difficult to understand. We just have to use common sense and just look for the same things every time. What structural high created what structural low? What structural low created what structural high? What was the last selling volume in the counter trend downtrend before the expansion to the upside occurred? And vice versa. That's how we can determine the structure points and the areas we need to be looking out for when pullbacks occur. So in this case, Even though this is the pullback and that's the expansion, lower time frame, low, high, and we had a reaction off the prior supply, which is right here, and we failed to generate the lower low. We did not do that. Instead, we just blasted right off to the upside. So that will create our supply to demand flip, and that's exactly why we have this level. It's following structure upon a pullback, and it's an area of interest we can be looking to buy from, 91.35. So now you're saying, well, we haven't come back down into that level. Why are you looking to buy prematurely? Well, it's because we had this huge sell to buy. We've been creating equal highs here, equal highs here. If I just pull a trend line from this high all the way down, you'll see 1, 2, 3, 4, 5 touches of this trend line. What does that mean? Retail is shorting in here. There's a lot of buy side liquidity resting above it. So that's another confluence for potential longs. But what we also had was an area of repricing. Now, I know it's not obvious. If you go to a lower time frame, actually, I'll just do it just to show you, like a 15-minute time frame. After we had this huge sell to buy, you can see this the counter trend. It is very choppy just because there was news surrounding this. There's your low, there's your high, there's your low, there's your high. This is the failure to generate the lower low in this counter trend downtrend. We stopped and then made that high, created equal highs. So this is our repricing event that we came into to the right. And before that, we generated liquidity here and here. Right? Before coming into this blue box, we generated a lot of liquidity. We came into that, and if we zoom in, we can see accumulation. Right? Discrete lower lows, lower highs, a lot of consolidation, accumulating prior to expanding. This is the last selling volume here before we made that higher high. We generated more liquidity sell side. We swept it, sweeping these lows. So this trend line, 1, 2, 3 touches. Why do I draw trend lines? It's to show where retail is likely getting in. So if retail is buying with this triple bottom or this ascending trend line, then there's liquidity to the downside because they're placing their stops below. So price sweeps those lows. We come into that imbalanced move. This is just straight buying volume right here. There's no selling that was offered. And we come into that demand level, and then we make a higher high in comparison to that high here. And now we're just continuing. Now we are just consolidating. And if you look at it from a larger perspective, and I'll just zoom out to the hourly, you'll notice that really from here to here, we've just been consolidating for a while, really since the 1st of August, so the beginning of this past month. So what does that tell us? 3 weeks of no really good price action. There hasn't been too many setups, right? So as much as I would love to give you setups, and as much as I would love to get us into trades and get us opportunities to make some money, that's not always going to be the case every single day, every single week, every single month, right? That's not how money is made. Money is made patiently, right? Money is not made every day. And if we can get in the habit of understanding that, you're going to be a lot better off in taking more highly probable, more patient setups, right? Because if you are trading every day, that's probably not the best thing to do because there's not always a setup every day. I'll tell you that. Just in my opinion, based upon the way I trade. Maybe for you, if you guys are scalpers of some kind, then that might be a possibility. But again, I look for very specific things and I look for probability. At the end of the day, my overall strategy is profitable. If I lose, I don't care. I move on to the next setup and I attack it the exact same way. If my setup is met, great, I'm attacking it. If it happens 5 to 10 to 20 times a week, boom, I'm attacking it 5 to 10 to 20 times a week. If it's only happening once a week or not at all, I don't attack at all. I have to be patient and act like a professional and be a professional, right? To get professional results. So we had this entry. We actually had initially an entry from here. Why right there? Well, we had liquidity that was run, sell to buy, we repriced, and then we made a higher high in comparison to this high, right? We came back down into that level. That's what we tapped into it initially, right? So we had liquidity built up prior to that level. We sold into it. We reacted from it, but we never had any follow through to the upside. All right, we ended up continuing down. So I told my VIP members, and I don't believe I presented this on a pre-market analysis video, but I said that we could take this low, still stay within this overall range here, and continue long. So that's exactly what we might see. Sweep sell side, we just come back down again, and then we continue. So I set multiple buy limits. I set one right there, and I lost that one, and I set one right below the low, and I'm in profit. right? Because the probability at the end of the day that we are going to go long is higher than the probability of us going short. And if we end up going short and I lose 2 trades, well, at this time I'm break even on this one, and I've taken partial, but let's just say I didn't. Then I lose 2 trades, then I come back down into my higher time frame zone at 91.35, and I take another trade to the upside. Because again, what is the probability at this current time, right now? What is the probability that we go like this? It's not as highly probable as if we go like this, or like this, or like this, right? So take the probabilities and just place your buy and sell limits. That's how I approach trading. Because I take losses. I take losses all day long. But again, my winners are bigger than my losers, and I don't care if I lose 1 or 2 or 3 trades in a row, because that 4th or 5th trade could be that big winner for me. And the probability of me winning when I'm trading with the overall trend is significantly higher than if I'm trying to trade counter trend, right? That is how we become long-term profitable. And I can teach you how to do this. And it's very, very simple. It's really just finding your levels based upon smart money concepts, supply and demand, and overall structure. Those 3 major factors play a huge role into my trading. Now, obviously there are intricacies and finer details that we can talk about, but for the sake of this video, I'm not going to discuss that. That will just take too long. But anyways, guys, if you want to learn my step-by-step methodology, because it really is, quite frankly, almost a step-by-step in a sense, just schedule a call with me on my website, aerialfxtrading.com. I would love to talk to you. We'll see what we can do with that. Anyways, I want to continue long. What we'll likely see come next week, hopefully a run on the previous high, hopefully taking buy side liquidity. I'm already in this trade here. I'm in this trade here. So looking very promising. I would like to see another failure to generate a lower low, a higher high, and we just continue with that. And we have the higher time frame level down here if we ended up breaking short. All right, so that is AUDJPY. I'm not going to go over all the other pairs as in depth, meaning taking that long, just because I wanted to discuss everything that's going on, how we approach trading, and now I can really just get into the thick of things here. And because at the end of the day, this is CADJ. We just discussed AJ. They pretty much follow the same pattern, XXXJPY. All right, so let me get rid of that. Here we go. So on the higher time frame, we talked about this last week. We were extremely bullish. We had this descending trend line, so there's buy side liquidity resting above. We had the huge sell-off, sell to buy, just like we saw in AJ. This wick here, you can see it, it swept these lows, these equal lows, it swept it. That's a liquidity run. So within the liquidity run, sell to buy, we want to look for repricings on a lower time frame. Hourly, and this is where it looks really pretty, right? We had the lower time frame in here. These are hourly candles, but imagine this is like the 10-minute time frame, right? It's a huge range on the lower time frame. We swept buy side, we swept sell side, and then we continued long. That buy to sell to buy type 2 manipulation we talk about within our course material is what drives this setup. So we ended up creating a higher high in comparison to this high and this overall high here. We had the repricing, right? The sell to buy reprice, the failure to generate the lower low within this downtrend, or counter trend, I should say. And then we made the higher high. So that is the demand. We generated equal lows relatively, but we never came into that. That's the most important thing. So even though we made a higher high, I still like the fact that, well, I like this level of demand. And I like the fact that if we come into it, it's very highly probable because, for one, we have buy side liquidity. 2, we have sell side liquidity. And 3, we have an unmitigated level of demand. So that could be interesting, you know, sweeping buy side first, right? Buy side, sell side, meaning here, and then buy side again. That is something that we could see. And that's why I still think that that level 105.80 psychological level is still valid. We have a lot of buy side liquidity as well. 1, 2, 3 touches. Retail is likely shorting, placing their stops above here. So that is liquidity. Now, I'm not saying that we're going to come into here. So I'm not saying just to immediately sell it upon market open. That would just be dumb. But we need to be putting confluences together. So if we have an opportunity to where, you know, we go like this and follow the current downtrend with the overall target being here, we may see, you know, sell and buy side liquidity, sell side run first, maybe buy side run, lower low. We may pull back into a level of supply potentially, and then we could potentially counter trend short it into that level to where we would then buy it. All right. So something like that. We have to be building confluences for every single trade that we take. Every single trade should be treated independently of each other. Now, not to say that we can't just come into here like we did because that is demand, right? This is a low, high, low, high, low, high, low, high, low, high, failed to make the lower low, and we failed here as well. And that's where we made the higher high. So could we just pull back and go along like that to continue with this overall structure kind of? Yeah, that's a possibility. So that would be that level of demand that we came into, and we built liquidity right here, these equal lows. We swept it, and now we're continuing. However, this formed on Wednesday, so I'm not quite sure if we will sweep last week's low, which is this low here, and then go long, or if we'll just continue long now. We'll have to just wait and see. So with that being said, this is our higher time frame level. We have lower time frame areas in here, meaning we could, sweep sell side, all this sell side liquidity that formed yesterday and today, maybe sweep it into here, right? That could be demand, sell to buy. If we see that, we could look to pull back and long it, something like that, right? We're building confluences for an opportunity that's more intraday / intra-week. But if it falls and we lose, or even if we just don't take the trade, then we have an overall level then we can still play off of. So it's just about being patient, and not to say that you have to only wait for this opportunity. If you get something like this, why not buy it here and try your luck, right? Your confluences are met. You're following structure. High, low, high, low. We came into repricing. We swept sell side liquidity. Sell to buy. We failed to generate the lower low. We made a higher high. We pull back for the third drive to go long. We're creating buy and sell side liquidity. We sweep sell side, which fails to generate the lower low here, and then we make the higher high, right? So we're just building confluences, but it's on a lower time frame. And if that happens, great. We don't have to wait for this level if we find a setup like this. If we don't find a setup, then obviously we wouldn't be trading it, right? And we would still wait for this level. And if it just never comes about, say it just keeps trickling and just never pulls back, well, then we move on, right? We can't have FOMO either. But if nothing like this happens and then we just, pull back, I'm buying. Or if something like this happens and we lose, great, attack the market the same way because you have your higher time frame level you can buy from. So hopefully that makes sense, guys. Just rewind the video and go back if that was, too quick for you. I know I talk fast. That's just who I am. But anyways, that's my point of view on CADJ.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
Chef J, very similar. Very, very similar. So in this case, actually, let me go to the 1 hour. We have swept buy side liquidity first. We have created equal highs. We come down. We take equal lows in here. So buy side liquidity has been run. Or well, first sell side liquidity was run. Then buy side liquidity was run again. Now we're creating more sell side liquidity. It's really just, seek and destroy at this point, right? Buy to sell to buy to sell to buy to sell. Yeah, we know how that works. Anyways, what do we do when we're confused? We zoom out. When in doubt, zoom out. We're bullish. Okay, great. That takes care of half the battle. We know we're looking for longs. So where's our higher time frame structure, right? Go back and watch the previous pre-market analysis video if you guys are confused. I go over the step-by-step methodology into the way I approach top-down analysis and the way that probabilities help me with my trading in a very, very easy way, right? High, low, high, low. Where's the previous high? Right here. So in order for us to break structure, we need to close above that high. Where did it do it? Right here. So this is the current range of the market, right? That's our higher time frame range. So what do we look for? Well, the counter trend. Where's the counter trend? This is the counter trend. I know it's weird, but this is the high that created this low. So this is the counter trend. So let's look at opportunities to where if we get an overall pullback, it wouldn't be a break of structure to go short. It would just be an overall retracement to go long, right? Because on the lower time frame, this is a downtrend, but on the higher time frame, it's just an overall retracement for continuations, right? So let's zoom into this level and see what we can find. Hourly time frame. Well, it's the same thing that we talked about on CADJ and AUDJPY. Remember that news event that came out? We generated buy side liquidity and sell side, like resistance and support. It's just chopping around. We finally fall. We attract sellers into the market because people are, trading with the volume in terms of the volatility, and then they get screwed, as they should. Again, generating more liquidity as price starts to stop. Equal highs, equal lows, boom, we take sell side, we take buy side, we take sell side. Really, what is this? This is not meant to confuse you. All this is just institutional manipulation before the real move in the market. And we have to understand where they're getting in and where they're getting out. Okay, that's how we can determine when to place our orders, right? Amateur traders focus on when they're getting in, meaning like, oh, I haven't taken a trade in 2 days, I should probably place one. Or, oh, I just need to place a trade, I have FOMO. Professional traders think about it like, where am I getting in? Not how many trades do I need in a day? How many trades do I need in a week? You don't need anything. You only need one trade a freaking year, honestly. If it makes you 10%, that's an average return to the stock market, right? Think about it in terms of numbers, probabilities, and not how much. More trades don't mean more profit. More pips don't mean more profit. It's not how the market works, not how money works. It's very, very simple stuff, but that's why 99% of traders fail. It's because they think they know what they're talking about, but in all reality, they have no idea. So, sorry for the rant. I do that sometimes. Anyways, this is the last selling volume after the huge manipulative move, right? Sell to buy to sell to buy, right? That's the last selling volume. That's where we stopped. We never made a lower low below that low. This is where the higher time frame is. Meaning, let me just go back out. Meaning if we get an overall retracement, that would be that higher time frame area. Now we can follow the lower time frame, high, low, high, low, high, like that, right? So the probability is obviously bullish, right? Meaning we're looking to buy. If you had to buy or sell to save your life, what would you do? You'd buy, right? Obvious, right? No brainer. So where are our levels? Well, we have this high, we have this low, we have this high, we have this low, and we have this high. So we could sweep sell side liquidity come next week into this repricing demand or that repricing demand, either one of those. If this doesn't work and we go short, well, we have another one, boom. And that would be sell side liquidity into that demand to go long. Why is that demand? Let's look at it from a retail perspective. This is a wedge. We broke out of the wedge. We retested the wedge. Retail is short all day long. Now price goes long. That would be that mitigation of that demand that retail was originally going short from. Now we can buy it from that level. So that's why I have that level. But also the fact that we made a high, a low, a higher high, a higher low, and then a higher high. So we could have sell side liquidity run into that repricing demand and go long. If we don't, we'll buy it from there again. And if we don't, we'll buy it from here. And if we don't, we'll buy it from there. Because what is the probability overall that we don't at least, if price were to come into at least this level and we get our first entry, what's the probability that we don't make money? Very low. Why? Because if it's bullish, it's either going to react off of here, 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 or here. Because if the probability is higher that we'll go long versus go short because we're in an uptrend, don't you think we're bound to make money if we react off of just one of these levels? I'm not saying place 1,000,000 trades. I'm saying that we have to first understand our levels. These are the lower time frame levels because we're following lower time frame structure. But if we get the overall retracement, now we have the higher time frame levels because the probability is that we're going to go long. And if we lose, let's say this one or this one, and we win this one here, then great. Our winner will outbeat our loser because we have high risk to reward trades. It may take a few days or a few weeks or whatever, but that's why we have to be patient. And so that's how I approach trading. It's very simplistic. It's very stress-free. I'm not like scalping the market trying to make 1 to 1,000,000 risk to reward, right? I don't like when, I try to scalp with a 1 pip stop loss like so many people do because they want to make $1,000,000 overnight. It just messes with your psychology, right? Take it slow. A 1 to 3 risk to reward is phenomenal in my opinion, right? As long as your win rate's higher. Same thing with EURJPY, higher time frame. We are looking to come into 160. We haven't met that yet. This is a higher time frame level. I don't know why it does that. It extends my blue zone. Anyways, there's a level in here of supply. Really before, actually, I don't want to confuse you guys. I don't want to confuse you. Just know we're bullish, okay? If we're bullish, great. All this stuff doesn't really matter because we're currently on the lower time frame continuing to push higher. So where is our structure? Well, high, low, high, low, high. So where's the current range? From this low to this high. This is the current range of the higher time frame. Where's the lower time frame structure? High, low, potentially higher high, right? If we break here, does not mean we're going to be pulling back to go short. It just means we're likely to experience an overall pullback before continuing. If it does break here and we go short, well, then that's where we zoom out and see the higher time frame. High, low, high, low, high, low, high. Overall pullback. Where would that come into? Well, where did the counter trend end? This is the low, high, low, high, low, high. Failed, higher high. Anywhere in here would be that level of interest for overall retracements for continuations. That is how we can see lower time frame to higher time frame structure and their areas of interest. Right? I teach this all day long in my course. All day long. And it's so simple to follow. As long as you're patient, you're going to be fine. So anyways, continuing. Same sort of deal like AJ and CADJ and EJ. Well, what do we go over first? CHFJ. We had the huge sell to buy, the manipulative move on the lower time frame. We actually came into a prior structural point right here. So we have 154.9. This is an area where this was a prior supply. We came up into it, we just busted right through it. So that could flip from supply to demand. That would be the start of the imbalance. So 154.9 psychological level. We could also come back down deeper, 153.5 psych level, round figure. Also lower time frame imbalance fill. This is just straight imbalance, just straight buying volume. We also have that last selling volume right there. So that's demand. So that would be our higher time frame levels. Now, we never came back down into it first. Right? We made a high, we made a low, and we made a higher high. So now we can see we swept sell side in here, buy side, and sell side, right? We're just kind of taking liquidity on either side of the market. Anyways, I think that we may have one more run to the low because we can see this is where the counter trend ended. We made the higher high here, right? We pulled back, we mitigated that demand. That's easy. Creating the new demand. Higher high, that would be the demand level. Notice how we didn't come back down into it. This is Wednesday's low. So we could come next week, sweep last week's low, which is this low here, come into that demand and go long, right? For that huge buy to sell to buy move, right? Buy side, sell side, buy side run, sell side run, continue. Type 2 manipulation into that 160 level that we've been wanting for quite some time. So that's definitely something that we can be looking out for. Of course, if it breaks and comes lower, then the 154.9 and 153.5 levels are valid. All right, Euro USD. So EU, we have to look at it from the higher time frame perspective. Currently, we're bullish. This black line is a higher time frame demand. This is why it's so great to trade, because you can see it play out on the lower and the higher time frame. Look at this. Actually, I'm going to go to the monthly just to show you how fractal the market is. Look at this. This is what? 1971. High, low, high, low, high. Where's the last selling volume of the prior pullback? Right here. Didn't make the lower low. That's the last selling volume. That's the supply, previous supply is right here, to demand flip. Where do we come into? Boom. How do we come into it first? We generate liquidity. Boom, we sweep liquidity. I would love to see a higher high now. And I do think that's going to happen because, you know, all the BRICS nations abandoning the US dollar. I think the US dollar is going to shit. I think it's going to shit itself, to be honest with you. So that means XXX USD longs in the long run, I think, for sure. Maybe not in the short run. That's just why we just have to be careful. But overall, I think the US dollar is going to plunge. So that means, you know, XXX USD longs. Anyways, that's the higher time frame level. That would be our last selling volume. But again, that's, I mean, we could never pull back into that. That's weeks to months to years away if we even do. Anyways, so continuing, current structure. High, low, high, low, high. Where's the range? Right there. What were we originally looking for? For those of you who have been following us, we were looking for buys in here, right? So could we have gone like this? Sure. But what do? We broke the structure. So what does that mean? Should we be looking for pullbacks to short? No. Why? Because this is the range. This is just the overall pullback most likely for sell side liquidity run to go long. That's what I'm looking for, right? Always have to zoom out. Where's the last selling volume? Right here. Well, we have another one right there. So anywhere between these black lines is where I'm going to be looking to buy. Now we came into our first level, 1078. Yep, 1.078, sweeping sell side. And now we're, if you just see in the 1 hour time frame, we are starting to accumulate in price, right? Discrete lower lows and lower highs. All right, let's see if we are at all diverging. And we're starting to diverge in a sense. If you look at it here, you know, we're bottoming out, but right in here, price is still falling. So volume is not falling, but price is still falling. Tells me there's a potential pending reversal, and that comes at a beautiful time because we're entering into these areas of interest. So between these two black lines, so I'm going to be looking for price to start to shift, for the dollar to start to weaken overall, and we go long. But until then, I don't see anything on EU. I'm really not looking for anything right now. I just don't find anything interesting. So I just have to be patient.
Folks, if you're looking for an automated trade journal or trade copier, then check out my sponsor, Swift Journal. They connect to your MetaTrader 4 or 5 broker or prop firm and give you amazing insights into your trading. To get 20% off, click the link in the description and use coupon code TRADINGNUT.
GBP Swiss franc. So GCHF is very interesting because we've been consolidating for quite some time, really just within this range, right? We haven't been doing much. So we have to look at, in consolidation blocks, especially on the higher time frame, I look at supply and demand levels. Let's look at supply first. All right. If we were to continue short, right now we have to play the what if game. If we were to continue short, where would we be likely to pull back into before continuing short? This is a low, that's a high. This is a low. We're looking for pullbacks within this pullback phase. So where's our last buying volume? Well, we have one. If you scale into a lower time frame, you'll see that, but I'm not going to bore you with all that analysis, but let's just go right here. That's the last buying volume before we really fell. So 1.1350 around is where we're going to be looking for price to come into if we continue with this pullback, right? For potential shorts. Now let's look at demand. Well, we had the huge sell side liquidity run. All these lows were swept, sell to buy on a lower time frame. There's a repricing. That's exactly why we came into here, came into there. On the lower time frame after the repricing mitigation, right? So we came in there and mitigated, we created another demand in which we came into here, right? So we're following that structure now. So after we came into here, we had a reaction. We had one more sell side liquidity run. We swept that low, and then we broke the structure to the upside. So currently we're bearish, low, high, and we had one more sweep, sell side liquidity run, and then we made the higher high. So I think now we're likely to see, you know, the third drive into the high into here. So that tells me that we still have room to go to the upside. We have a lot of free space. So I like potential longs. Hourly time frame, we have this low that we could run, right? I like the huge sell to buy. And when I see this low, I'm like, okay, well, you know, we could sweep it as sell side and then go long. So what's below this low in here that we could be interested in? Let me just use bar replay here. Let's go down to the 15 minute. Let's go down to the 10 minute. And right here, perfect. After we swept the liquidity, right, the low was this black line, which we came and swept. We had the reaction, we had the repricing, and then we started the uptrend. So that is our lower time frame demand level. So let's zoom back out. So that can definitely be an area of interest, right? Because it would be below this low, would be the sell side liquidity run into that demand to go long, and we would take profit at our higher time frame objective. Because in my opinion, because we've come back down into our higher time frame demand, we've swept liquidity here, and then we made a higher high, we're now bullish, at least counter trend here, right? High, low, high, low, high. I think that's what we'll probably do. So that's what I'm going to be looking out for, right? Those are my confluences for that particular trade. That's GCHF. GCAD, nothing special about GCAD. We could see a couple of things. And this is where we can see the higher and the lower time frame come into play here. And this is where we just have to be patient. Higher time frame, we definitely are bullish, extremely bullish. This high is likely to get run out. We never came up into it. We probably will. That's a lot of buy side liquidity. Same thing in here. This is not a high in the market, guys. These are equal highs. What does that tell us? We're going to freaking run them eventually. There's buy side liquidity resting above that level. We're already bullish. So why would we ever look for shorts? Right? It's common sense. Common freaking sense. Seriously. So where's the structure? High, low. Notice liquidity run. High, low, mitigation, notice liquidity run, break structure, high, low, imbalance fill, we broke the structure, so now we pull back, liquidity run. We go long, high, and now we create equal lows. So that's why I like these two repricing events, one in here and this one you can't see, you have to scale in. But the current range of the market as of right now, if you look at it from a higher time frame standpoint, it's this: high, low, high, low, high. Right? Lower time frame, I guess you can say high, low, high, and then we haven't really created a low yet because we haven't created a higher high yet. So I would like to see price sweep sell side into this level and then go long for sure. We've been wanting that for a long time. Price just hadn't come back down into it yet. However, let's just say this is actually the end and now we are actually going to make a higher high and we continue with the lower time frame trend to the upside. What would likely happen? Well, let's see. Well, we can see in here high, low, high. So this is the range. So counter trend, low, high, low, high, low, high, low, high, failed, higher high. So where's the repricing? Right here. Boom. Now we came into that. However, this is Friday's low, and likely we're probably going to run Friday's low come next week. So I would like to see run of Friday's low just deeper down into here, a higher high, break of structure, pull back long. That's what I would like to see. If we continue short, then I would definitely like to see us come back down into our higher time frame zones down here because of probability. If we're bullish, what's the probability that we go long versus short? It's higher going long than it is short, obviously. A couple more. USD Swiss franc. So we've been counter trend bullish here on USD Swiss franc, right? Overall, we are still very much bearish, low, high, low, looking for an overall pullback. We finally got, we tapped into this repricing here. Now, could we come higher further up into here? For sure, because we can see that this is pullback short. We're experiencing the pullback. Could we come deeper up into the supply? Yeah, we could. We could come deeper. However, we tapped into this first level very nicely. We had a very good reaction. Does not mean we're going short immediately. We have to be careful, but it does mean that we have to be careful now, right? Because we could look to turn over, and that's what we're looking to see, right? Euro USD is coming into its level. That means USDCHF is coming into its level as well, so we could be seeing some dollar weakness at some point in the future. We created buy side liquidity, equal highs. We created sell side, equal lows. We had a buy side liquidity run into that level. Now we could fall and take sell side because we've already come up into that level. Could we start to short? Now we could. Does not mean to just sell it, guys. I'm not going to say, Sunday market open, oh, let's just push the sell button like an idiot. No, that's how you blow your account. We have to treat it like it's an individual trade. How do we do that? Well, we just have to be patient. Is there a setup at this time? Yes or no? No, there is not. Why? There's just not. We should likely see some sort of distribution and then clear break, and then we can look to short. Right? Just because we came into that level doesn't mean we can just be placing shorts unless you want to put your stop above the high. By all means, if you want to set your sell limits, sure, you can. Just place your stop above the high. Right? So this is Friday's high. That will likely get run. Right? I'm looking for some sort of setup. Right? Whether that be something like this. Sell side, buy side, sell side, pull back into supply short. Just a clear shift in direction off of the higher time frame levels. If we don't and we just continue, well, we could come back up into here and we just have to be patient. We could go like this, and that's where we could look to short it. Something like that. I'm just letting you know that we are in areas of interest that we should be keeping an eye on for dollar weakness. Euro USD, like I showed you, came into that higher time frame level. I don't think it's quite ready yet for actual buy. Just like USDCHF, I don't think it's ready yet for an actual sell because I don't see a lower time frame confirmation. But if we get lower time frame setups and lower time frame breaks of structure off of the higher time frame objectives, that's a good sign. So that's USDCHF. That's my bias. I'm looking for overall shorts within this sort of level. So anywhere in here, I'm looking for price to stop and continue short. NZD Swiss franc. So yes, we are definitely bearish. However, on the lower time frame, I'm seeing some sort of maybe intraday / intra-week counter trend opportunity, especially because if I pull my VFI indicator up here and show you the divergence, we have very, very high divergence. Volume is increasing. Price is not. That's the potential for a reversal. All right. So accumulation is starting. You can see the discrete lower lows and lower highs. And right here, we finally broke the structure to the upside. We generated that demand, that supply to demand flip. And now we're generating a lot of sell side liquidity. This could potentially be head and shoulders, potential fake out, go long, right? For continuations. Something like that. So that is what I'm looking for. And that definitely something we'll be looking for come next week. Alrighty. I know I talk fast, guys. Just go back and rewatch it. I know I can go on tangents as well. So just be patient with me. And if you have questions, as always, I'm definitely free to help in any way. So just like AJ and pretty much all the other yen pairs, we're looking for overall longs on XXXJPY. Right, on the higher time frame with NZDJPY, we are extremely bullish. Now, higher time frame. This is the overall pullback of the higher time frame. This is the overall expansion of the higher time frame. So what could happen? Could we see an overall pullback again within this range? Sure, we could. If we continue short with this counter trend downtrend, sure. Where would that likely come into if that were to happen? Well, where did the structure break? Low, high, low, high, failed, higher high. Where are our repricing events? So if this is the overall selling volume, let's kind of scale into that and see what we can find. Well, we have a level here. You can't see it, you have to scale in. 83.35. It's actually below these equal lows. Look at that sell side liquidity before the level. So that's a potential level. And then lower time frame, we have a level here because that was, we can see low, high, and then we failed. We made the higher high. You can't see it because it's higher time frame on the 4 hour. If you zoom in, you'd be able to see it nice. But those are our higher time frame levels. So that means that if price breaks, that does not mean we're breaking structure. It just means we're experiencing an overall pullback because this is an overall expansion. This is an overall pullback potentially, and that could be an overall expansion, right? And then on the lower time frame, obviously, you have your lower time frame structure that we could be playing off of. So where's that? Well, high, low, high, low, high. This is the current range of the market. We have not had a high above this high yet. So where is the previous low? Right there. So this is the range. Where's the previous repricing? Right here. That's the demand. Look at, what do you know? We came into that level. Sweeping liquidity. Sort of a, I don't know, skewed head and shoulders, sell to buy potentially. So, I mean, anyways, we are looking for longs. If we break, then we have our higher time frame levels down here. But until then, the lower time frame still could suffice. 1 hour time frame, we have equal highs. We have descending liquidity, 1, 2, 3, 4 touches. We have equal highs here. We have descending liquidity here. I mean, there's so much buy side liquidity. It's not even funny. But anyways, just like AJ, I'm not going to go through all this again, but we had, the huge consolidation, lower time frame, buy to sell to buy. Where are our repricing events? Well, we have this level here. That's our last selling volume that failed to come below that low, and then we blasted off. So that is our demand. You can scale in for lower time frame, better picture, but you get what I mean. 86.065 or 86, right? Psychological level. We came into that very beautifully. Okay, but before that level, what do? We generated a wedge. 1, 2, 3 touches. 1, 2, 3, 4, 5 touches. We broke out of the wedge, sell side, attracting sellers. But what do we know? Well, that's our level to begin with. Now we buy, right? So it's trapping retail on the opposite side of the market before continuing in its right direction. So we sell off, we buy it, and we go long. We create equal highs, we create descending liquidity, we're in profit. So I fully expect price to go take previous liquidity. So I will place my stops to break even and take partials once this high is run, right? Because after this buy side liquidity is run and these equal highs are run, could we then continue lower to continue with the overall structure? Potentially, because we could come back down into here. That's a potential. So that will happen, meaning like I will be taking partials moving stop to break even after this, right? If we continue, then great, because this could be the low in the market to where we finally reprice ourselves and go long. right? Because we came into the higher time frame to begin with. So does this sort of make sense? You know, I'm putting together different scenarios and different perspectives, right? But at the end of the day, it's all probabilities. And if I lose one, fine, move on. We go for the next one. Because if I win the next one, that's probably going to outbeat the loser I had. Net profit, right? And it's all just about probabilities, right? If you were to think about it like this. If someone were to tell you you have to either buy or sell it, or you're going to lose your life, what would you do? You'd buy it, right? I mean, you have to use common sense. And I know what I'm not saying is this. I'm not saying trading is easy. Trading is very difficult. And it takes a lot of years of experience and practice to sort of get the intuition and the experience you need to see certain things and put together a trading plan. I'm not saying that you have to all be masters at this right now. I was in your shoes at one point before, I promise, right? But how we get better is by doing the little things right. Having common sense in trading, right? Handling our emotions, having a trading plan, staying disciplined no matter the outcome of a prior event. Attacking the market the same way when all of our confluences and rules are met. Not caring if you lose because it's a part of the game. Having probabilities. Are we bullish or bearish? In this case, bullish. Great. We look for buy setups. What's the lower and higher time frame structure look like? Where are our levels within the higher and lower time frame structure? What does the intraday time and price liquidity runs, how does that impact our trading? How does that provide additional setups? All of this factors in to a very well-rounded strategy that you just have to implement every single day and be disciplined with it. That's it. I've been doing this for years, so it's naturally easier for me. Now, for those of you who haven't been doing it for that long, and maybe you're not profitable, that's fine, right? But we have to get you in the right mental state and be doing things very disciplined and just having common sense at the end of the day as well. So guys, if you are interested in learning how we do this every single day, maybe not every day because there's not always a trade, but you know what I mean, how we do this on a day-to-day, week-to-week, month-to-month basis, and you really want to get that plan and that regimen and fully understand exactly what is going on and not being so bombarded with information and just clustered with and confused about what's going on in the market, but having clear identifying structure points, meaning clear identifiable A to Z step-by-step plan that you can follow and implement, sort of almost like a very structural approach. That's what I'm all about. And that's how I can help you. So if you're interested in that, head over to my website, Ariel FX Trading, book a call. It's free. If you think it's the right fit for you, let's get you on board. If not, no worries. I'll give you my trading plan for free anyways. All right, guys. So if you have any questions, feel free to reach out to me. My Telegram is @ArielFXTrading. And I hope you guys have a great weekend. And I look forward to the coming week ahead. Happy trading and take care.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.